Hey, what's up everybody? Tuesday, July 30th. Today I want to talk about the British pound and Brexit. And I'm just going to go right out and say it. I think the British pound now, at the level where it is trading, is one of the grossest mispricings of currencies that I have seen in a very long time, maybe ever. Okay? Let's examine what Brexit means for the British economy and more specifically for the pound. Now, you remember, Brexit was voted on, it was a yes vote in June of 2016. At that time, the pound against the dollar was about 1.47. It ultimately dropped all the way down. I believe it got as low as 1.07 in the flash crash in October 2016, then it gradually went back up to 1.43, and now it's down to 1.21. It has recently sold off pretty hard in reaction to Boris Johnson becoming the new Prime Minister of the UK. Let's examine what it means. And I think a good model for this would be Russia, following the sanctions that were imposed after the annexation of Crimea. The sanctions, and there were a series of sanctions from the United States and the EU, which effectively curbed or limited or impeded trade with Europe, the United States, and some other countries. The result of that was twofold. Number one, you had the Russian economy respond by introducing substitutes, import substitutes. It actually developed a portion of the Russian economy which had not really been that active prior to the imposition of tariffs, and that is ongoing, by the way. The second response was by the central bank, which reacted to the slowdown in the national economy by cutting interest rates. That is deflationary or disinflationary, and we saw right from the outset, from that initial cut in rates, and I don't know how many there have been quite a few, because I think rates originally, they jacked them up to 18%, that killed the ruble, and now rates are down to 7.25%, and since then the ruble has been appreciating against the dollar. So I think this is an interesting or a useful analysis to what we can expect in the UK, and maybe the Russian situation goes even too far. I don't think the negative the negative result to the UK will be as broad as what we saw against Russia. Now, understand that Britain, the UK, existed under WTO, World Trade Organization, trade rules for forever, basically, until they entered into the euro, the euro zone. Okay, they kept their own currency. Under WTO rules, trading rules, the pound was as high as $2 to the pound, even over that under those rules. So naturally, even if there is a no-deal Brexit, Europe and the UK would probably fall back on something very similar to the WTO rules, if not those exact rules. And we saw historically, as I said, that the pound spent a lot of time at much higher levels against the dollar and other currencies under those trading rules. All right, those are not egregious trading rules. They were there for decades, where countries, the United States, European countries before the euro, the UK, we all operated under those rules. And in fact, the United States and China still operate under those rules. So I don't see where that trading paradigm, if that comes into effect, is significantly negative for the pound. Then you are going to have, if that is even necessary, because again, those rules are not onerous when it comes to conducting trade, but let's just say it will have some negative or debilitating effect. You will have import substitution in the UK, just like you saw in Russia. And again, the Russian example is way more extreme. We're not talking about, really, really punitive sanctions and tariffs. I mean, way more extreme. And you saw the reaction of the ruble. And by the way, the reaction of the Bank of England will be exactly the same if it needs to be. So either you will have the economy in the UK respond positively to the new trading regime, whatever that is. Maybe it's the WTO. And if it responds positively, then all these zombies, they're going to look at that and say, hey, we sold the pound down way too far. Or if the initial impact is negative, if you have a slowdown in the economy, maybe even a recession, you're going to have the Bank of England cutting interest rates, and that is bullish for the currency, right? Interest rates, when they come down, that is price setting lower, that is disinflationary, it reduces inflation, and lower inflation is ultimately beneficial for the currency. I mean, we see this play out in the exotic currencies. I'm not talking about the majors, and I should mention that for a second, because when you talk about the major currencies, the dollar, the yen, the British pound, the Australian dollar, the Canadian dollar, those are widely followed and speculated on currencies. There's a huge portfolio participation by institutional investors. There's enormous speculative participation, and we know that these people, they're zombies. They operate under a flawed understanding of economics, so it's exactly the reason why, if you look at the United States, any other country that had massive fiscal deficits and massive trade deficits would literally see its currency disappear. And while the dollar was falling, while the Fed was cutting interest rates, as I predicted a long time ago when they first started to do it in 2015, it stopped falling when we got into February, March of 2018, and Trump started to threaten tariffs against China and basically the rest of the world. And that was a zombie reaction, thinking that, oh, tariffs are going to be wonderful for the US dollar, they're going to be terrible for everybody else. The problem with these major currencies, the ones I just mentioned, the dollar, the yen, the Canadian dollar, the Australian dollar, the British pound, the euro, is that they have this massive institutional and speculative following. And it doesn't mean that the fundamentals don't apply. They do. But the process for that to play out takes longer, because you have these enormous portfolio shifts that are driven by this wrong understanding of economics. So you have to take that into account. I am still short the US dollar based on the fact that we have massive fiscal deficits and massive trade deficits. If you look, for example, at what has transpired recently with, for example, the Turkish lira. Ironically, you had the Turkish President Erdogan saying, hey, the problem with inflation is that our central bank keeps raising interest rates, and that is causing our currency to decline. And interest rates, if they come down, this guy totally understands MMT. He said that if interest rates come down, inflation is going to come down and the currency is going to appreciate. And guess what? Maybe it was by his insistence or whatever. Maybe it was by his cajoling of the central bank like Trump is doing now. But when they started to cut interest rates, the immediate response was a higher Turkish lira and inflation coming down. Same thing for the Russian ruble. As soon as they started cutting interest rates, what happened? The ruble went up and inflation came down. Now you don't see this immediate reaction in the major currencies because of the massive institutional and speculative following, and they're all, read any major FX blog or website and they're talking about, oh, the dollar's going to go up because the Fed is raising rates, or they have it all backwards. So you have to factor this in. It's going to take longer for this process to play out, whereas in the exotic currencies, the second and third tier currencies, you can trade those very effectively with an MMT perspective, and the reaction to policy is immediate. It's immediate. So, bottom line is, I think that where the British pound is trading right now is, if not the grossest mispricing of foreign exchange, one of the most exaggerated, or one of the most extreme mispricings of foreign exchange that I have ever seen, and I've been doing this for 40 years. So ultimately, the pound is going to be much, much higher, but this whole process, I guess, has to play out. Big portfolio shifts, everybody's scared, everybody's interpreting this the wrong way, but ultimately, we will see a much higher pound. I'll go back and revisit this, I don't know, a year or two from now, just like we're looking back at my video from 2009 saying the dollar was going to be much higher when the Fed was engaging in all that extraordinary monetary measures. Nobody believed me at the time, but that's exactly what happened. Bye-bye.